Windfall profits refers to the profits which are significantly higher than the company would normally expect under typical business conditions. The unexpectedly large or above the normal expected returns is what is a windfall gain. It could be due to surge in prices or changes in market conditions or just any geopolitical event. In such cases, a windfall tax, which is a one-time additional tax, is imposed by the government on companies that have made unexpectedly high profits. These types of taxes are often associated with the oil and gas industry, like the OMCs, oil marketing companies, but they're not limited to this sector alone. Companies from mining sector, banking sector, technology sector can also be subject to windfall taxes if they experience unexpected extraordinary profits due to external factors. But yes, this term is mostly associated with OMCs, which are responsible for activities like refining, marketing and distribution of petroleum products. The windfall tax in India was introduced in July 2022 when oil companies made unprecedented profits due to sharp rise in global crude oil prices after the Russia-Ukraine conflict. Indian OMCs started earning substantial profits, especially from exports, as they were able to sell oil at a much higher price internationally. While these companies were making significant profits, there were concerns that this could lead to higher fuel prices in the domestic markets or reduce the availability of fuel within India, as companies might prioritize exports over domestic sales. The government saw this as an opportunity to generate additional revenue by taxing these extraordinary profits. The funds collected through the windfall tax could be used to address any economic challenge or provide relief to consumers just in case of high inflation. This tax is typically reviewed by the government every 15 days so that the government can adjust the tax based on changes in global oil prices and other economic factors. And whenever the government reduces the windfall tax, it is obviously benefiting the companies. Companies are able to retain more of their earnings, which means improved profitability and a better overall financial health. Stock prices can rise as the market anticipates higher future earnings. The reduced tax burden might allow the oil management companies to pass on some savings to the consumers in the form of lower fuel prices. And of course, with more retained profits, OMCs will have more capital available to invest in expanding their operations, improving infrastructure, or exploring new projects. So whenever we are trading in OMCs, it's crucial to approach it with caution and stay well informed due to the inherent volatility in crude oil prices and the associated taxes and regulations.